Good evening, everyone. It's an absolute joy to welcome you all to this special session on integrated business solution paper brought to you by Board of Studies Academic. We truly appreciate you taking the time to hear today. Unlike conventional subjects that focus primarily on rules, standards, regulation, formulas, the IBS paper invites you to think beyond silos and dive into real dynamics of business where finance, strategy, taxation, law are intersected. Let us take a simple example. Imagine a listed company planning to expand its operation into large scale dairy farming. Okay. At first glance, this appears a high level strategic decision. Okay. It may have decision like producing organic milk, cheese, probiotic drinks, etc. But such a decision is not taken in isolation. It is deeply interlinked with wide array of regulatory, financial, taxation, and accounting framework. Since the company is listed under SEBI LODR's regulation, any major investment decision, joint venture, strategic acquisition in the dairy value chain must be disclosed to stock exchange. From direct tax perspective, while income from traditional agriculture activities is exempt, okay, dairy farming, especially when integrated with processing and distribution, is typically classified as business income. The income needs to evaluate whether any capital expenditure, deduction, or incentive, or any type of provision which are available for long term profitability. In terms of GST, the company must ensure that input tax credits are properly availed on purchases such as automated milking machinery, feed processing equipment, cold storage units, etc. Accurate product classification is essential to determine the correct tax rate and avoid compliance issues in the future. From a finance angle, the project involves capital incentive decisions such as acquiring agricultural land, building infrastructure, and purchasing high yield livestock. The company must undertake detailed capital budgeting decisions, funding options like debt, equity, or external commercial borrowings. If if foreign loans are considered, RBI and FEMA guidelines must be compiled to ensure smooth cross-border transactions. Additionally, Ind AS 41, Ind AS 41 agriculture, biological assets such as cows must be measured at fair value less cost to sale, impacting reporting profits and requiring professional valuation support. If the company uses the cost model for land, disclosure must align with Ind AS 16 and Ind AS 107 wherever it is applicable. Now consider the operational and strategic aspects. The company may enter into supply contracts with the retail chains, invest in cold chain logistics, or even explore international operations or international markets for organic milk products. Each of these decisions has an implication for risk management, branding, transfer pricing, and foreign trade policy. In our previous sessions, we examined real life case studies from fast fashion industry, transportation, tea, FMCG, or so many sectors, each illustrating how business strategy, regulatory compliances, and financial performance are closely interlinked. So, whether it is dairy farming, tea cultivation, or high tech manufacturing, what appears to be sector specific decision is in fact an interdisciplinary exercise involving tax, INDAS, FEMA, governance, performance management, and strategic planning. This is exactly the kind of integrated thinking that the IBS paper seeks to develop among future professionals. Today, we bring you an interesting case study from mock test paper, the WAN. WAN Limited case study presents multidisciplinary business scenario that requires integration of key concepts from taxation, financial management, accounting, law, and strategic cost management. It involves tax classification issues related to dairy farming, performance management using ROI, RI, foreign exchange risk management through forward and money market operations, and compliances with FEMA and RBI guidelines. The case study also touches upon financial reporting under Ind AS 41 for biological assets and land valuation using cost model accounting. Overall, the case reflects the essence of IBS paper, which test the ability to apply concepts across subjects in cohesive real world business context. And today we are going to discuss this very case study so you can learn how to tackle such MCQ or descriptive questions with great clarity and confidence. All the case study material are already available on BOS Knowledge Portal. Today's session will be interactive and you are free to discuss your queries, whether in English or whether in Hindi. You can either speak up or type your queries in chat box. Additionally, the last 15 minutes will be reserved for you for your general queries. We are lucky to have CA Sumit Dada, and he's a very prominent chartered accountant with over 20 years of experience in statutory audit, tax audit, internal audits, as well as in business valuations. His expertise will help you to connect theoretical knowledge with practical knowledge. Okay, with that, let us begin today's session and explore this insightful business case study. CA Sumit Dada, sir, over to you.
Thank you, Deepak ji, for the setting the context of this case study. And good evening, all fellow colleagues. Students, this case study will go with basics. Let me start sharing the screen and then we can start discussing. So I'm presuming that majority of you would have read the question paper, read the case studies. So that would be, basics would be aware. If not, then we will start with, again, basics. Now, this case study, as we discussed, is about diversified agri-business. Now, before we take into agri-business, let me start with something off the records. Once you become CAs, and it should be very soon, we all apply for campuses. And at that time, when we were applying and my colleagues were applying, one company used to come to India from abroad and used to pay a package of 75 lakh rupees to a fresher. Now imagine you just passed a CA, finish your articleship, cleared CA final exam, and the first job you're landing is 75 lakh rupees INR in a foreign company. And that company was Olam International, which used to come to our ICAI campus. Now we all were surprised what this company used to make. And you will be surprised. One of the highest package ever given, and it is for many years, not only one time they came continuously for 7-8 years, they came to ICAI Delhi campus. This company is purely into agri-business. Now, the reason of giving this context to tell is that business can grow anywhere exponentially if you know how to run the business. Now, what is Olam used to do? It is just like Ola or Uber of agriculture. Now, we all will agree that whatever will happen, whatever technology may come in, whether it be AI, Chat GPT, any deep seek, you name any technology. Is there any alternative to food? I'm sure you all will agree it is no brainer. There is no alternative to food. You need basic dal roti, you like rice, you like wheat, but something we need it. So this is non-negotiable, this is non-questionable. I don't foresee any alternate to these food habits. You need to have something to eat always. Now this company started working on just like how many of you take ever have you have burger from McDonald's or KFC or Burger King any. Now when we know brands, when I say any brand, McDonald's, Burger King, is it assumed that if you go to one shop, one store in one particular city, and you go to another store in same city, do we expect same quality of food or different? Yes, no, maybe. So I'm sure we agree. We expect same quality of food. Now, how do they get same size of potatoes, like McDonald's, say for example? So they buy farms. They take on lease farms from farmers for ages. That okay, we take this 100 acres of your land for next, let's say, 20 years of lease. Your job will be only to grow a particular type of potatoes for us. Because when we are as a consumer of McDonald's, my I want my user, my customer to have same quality of potatoes. Because if I make French fries with thin potatoes, it may not give you the taste. So I need to have good quality of potatoes. Similarly, when you want to grow a business, so just like Olam did, they also did an aggregator. They become aggregator of entire agriculture industry. Now, in this case, what we are discussing, this case was started with with Mr. Karnal, who started with a business of agriculture in India. After independence, we had a green revolution in 1965. When we say green revolution means India used to be considered a land of drought at the time. There was a lot of famines. Uh, there were not enough foods in India at that time. Then we have technology where the agriculture grows so fast in 1960s, 65. Now, when agriculture is growing so fast, then what do you think should be other byproduct where I can enter in? So then it would be pesticides and insecticides. Why pesticides and insecticides? Because then I need somebody need to there to protect my crops. Because if there is one insect comes in, one bugs comes in, entire crops get devastated. I'm sure you all would be aware. If you are aware, a lot of people who plant greenhouses. Greenhouses we plant. So there's a technology of planting called greenhouses. A lot of people plant greenhouses, and unfortunately, one bug comes in, one pesticide insects comes in, entire your entire crop goes for a toss. And these are heavy investments you do. So to protect that, he came into the product of pesticides and insecticides. Now, just to give you a brief idea on agriculture landscape, any idea out of India's GDP, how much GDP agriculture contributes? Roughly, any vague number anybody has in mind? How much GDP India, if I take annual GDP of India, of let's say 100%, how much is contributed by agriculture sector? There is no negative marking in the class, in the chat, so you can give any number you think which makes sense to you. It's a range. You can give a range. You can give one percentage. Any thoughts anybody has? Thank you. So in terms of GDP, our agriculture industry contributes 18% of it when we terms in terms of monetary terms. So 18% of GDP of India is contributed by agriculture sector. But interestingly, if you see the workforce, we have 40% of workforce coming from agriculture sector. So out of entire India working population, if we take 40% is directly or indirectly engaged in agriculture and allied business activities. Now, in terms of milk production, where do we rank in the world? First, second, or third in terms of milk production? And I'm sure most of you would be aware, in terms of milk production, we are number one since 1990s. Since 1990s, after surpassing US, our production of milk is the highest in the world. Despite the breed of cows and buffaloes of US is different and ours is different. They give 20 liters per day. Ours average gives 4 to 5 liters per day. Still, because of our population of cattle stock, our production is much, much higher. These numbers I'm just giving to set a context to understand how business can grow, and you need to know the landscape. So, those of you who would be reading more on startups, you would be knowing that we use terms called TAM, SAMs, total addressable market, total serviceable market, how much market I can achieve. So that's a broad overall picture. Now, just so he wanted to start with agriculture allied activities in India because though he was not into farming, but then he thought, let me start because there was green revolution and white revolution. Green revolution, we call it like you all would have heard in the name Harit Kranti, we used to call it. Green revolution used to relate it to all agriculture's boom in India. And then comes this 1970s white revolution, Doodh Kranti, that is all due to Amul. When Amul came into India as a cooperative concept, every farmers directly started to be a part of cooperative society and become a partner of Amul. And that becomes the revolution in India, and our production increased so much of milk. Now, when these things happened, the owner, Mr. Karnal, decided that let us start into the activities of having pesticides and insecticides because every farmer will be needing it. So, National Fertilizer of India, these are government companies, and similar to this, there are many other companies. Once he started this business and this started business growing well, then he started into other businesses. Then he started into a business of dairy farm. Then he started into business of animal feeds. So Mr. Karnal Singh, just to give a background, he started in 1965 in Punjab. His initial business was on crop protection solutions, that is pesticides and insecticides. And because agriculture movement was there, so this is a time to start something. And that's why it is always important to understand the market scenario. So let's say take for example, now smartphones are prevalent everywhere, right? Now, if I cannot start a smart cell phone business, I cannot create a Apple or Samsung or Oppo or Vivo in that form. If I cannot produce a phone, and if I want to be connected in this industry somehow, then what should one do? Now, if phone is one of the product, what could be byproducts I could give on phone? Any quick thoughts? If I want to start some business related to phones, technology of phone, and I cannot start manufacture phones, that is out of my budget. What could be another thing I could do as an individual? Then I could do a business of starting phone repairs. Now, if imagine if I have a phone of Apple, and for after 1 year after the warranty gets expired, and my phone is not working well, if I have two choices, either I go to Apple store that will charge me bombshell, or I go to my a neighbor shop which is phone repairs and all, and he says I expertise in Apple phones repair, which will be almost one third of the price which Apple repair center may take. Where do you think I should go? And I'm sure you all will agree that a customer will always like to go for the lowest generally and to get the best service. Similarly, many villages in India, they all, in fact, many colleges have started uh, have started technician services of repairing phones, and they all started opens their shops in respective villages because now phone is in every hand. Now somebody from a village will not go come to city for repair and all. Similarly, when everybody is doing agriculture and I don't have land and I don't have business to go into agriculture because of limitations, then I would like to know what is the need of this agriculture business. So the need of business would be everybody would need pesticides and insecticides. So he started into that and it ventured well. Now, since it ventured well and we business multiplies. Once you start something and start working well, so his green revolution started and he started crop protection division, which is by selling pesticides, insecticides. It was working very well. Then in 1970s, when white revolution came and the dairy business started moving, he started into dairy farming. Then he says, let us venture into that. And after the dairy farming, then he realized that all animals will always need feed. They need food, and that will come from animal from agricultural product only. So he started animal feeding business also. So these are the three verticals his company is working on. So in the name of the segment they've given is the segment as of just give it a minute. The segment they've given is crop protection, dairy division. In dairy division, they were doing milk production and dairy products. In animal feed, they were selling compressed feeds, legumes, and grains, which is generally needed for all poultry, hens, or even cows or any other animals. They have cattle fields. Now, their vision was providing sustained value that nourishes people and the planet. So, I will take product only where it nourishes people. And these taglines are becoming very relevant. Now, since we just talked on dairy product, the tagline of Amul, the taste of India, is since 1965. It is one of the longest running advertisement. And this tagline touches people. Now, if I'm into a business of selling dairy products, I need to. So, if I'm selling into products of dairy products, my input should be controlled. And how my input can be controlled? My input can be only controlled when I either lease out them permanently for me or I own the products. So currently they were working in mostly in Punjab. Hoshiarpur was headquarter. Now his second generation, his son, Mr. Kunal has joined. Since they were running this business from long, profit automatically comes. And at times, certain businesses are called as autopilot business. Autopilot business means once you set up a business and then you let anybody sit on the chair, the business will at least start generating some returns at least because of the vintage it has, because of the legacy it has, because of the timelines it is working, because because once the business start has made its own name, then even if the promoter moves out, the business will continue to remain as it is until unless the person sitting on a chair do some goof up. It generally runs in the same way. So he was getting what he's doing existing business, but when a new generation comes in, they would always like to do something which their previous generation would not have done. If a son has got a, a legacy, his success will be only counted when how he can increase the legacy and not how he can deplete it. So keeping a legacy is okay, but increasing the legacy is what marks the success. So he also thought to start something new. But before that, they start doing a division-wise performance. Now, every every division will have own head of division, different staffs, and you motivate people by giving respective bonuses and increments based on your division growth. So it cannot happen if I have three verticals. Let's say one is uh, dairy product, one is crop protection. One business is doing very good, another doing is pathetic, but I give same level of growth to both divisions. I give same level of increment to both, same level of bonuses to both. What is the risk if I do this? Should it be doable or not doable? Or people will say, no, I am working under one brand. So if it is business failure, it is company's failure, not mine. So I should get both. What is your view? If you want to assess the performance of each division, shall we give growth division wise, or shall we give as a company wise that everybody should get same growth? What is your view? Any quick thought?
Division wise, sir.
Division wise. What how do you respond to the employee who will say, I'm actually working for a company, not for a division? If the division did not perform well, why are you penalizing me? What would be your response to him? Logically, your answer is right, but we need to always see like a devil's advocate, right? Because the person who is losing will not like your logic, because his pocket is getting impacted by your logic. So he will say, I'm working for a I'm working for an organization. Organization should take care of it. Now see, in a discussion, in a debate, or in a logics, everyone has his own merits. But the drawback of this decision would be, if I try to give on as a company level, then do you think the good department would like to work more? They will say, why to work more when even if you don't perform, you get the same bonus. Then why should I work and efforts more? The company will take care of it. So you need to always give targets and performance based bonuses and increments. Then only people will take it. Otherwise, you will not give them the kick to perform more. And that's why it is always said that you need to always give clear targets on day one. That based on if you achieve this milestone, then only your growth will be there. So there is no unfair treatment to them at the last minute surprises. Nobody likes it. So he realizes that now we need to go ahead, go for expansion. And when you are successful in one state, probability is that you may be successful in other state if you understand the state well. So they say, let us increase our regional reach and national outreach. Try adding new verticals. So they try to go for new leadership and new businesses. Now their evaluation of division was that we have fixed return on investment. We have decided that okay, for each division I need 9% return on investment, a certain percent of return on investment, and which one will have a highest residual income. So if I am the CEO of the company and I need to choose between three divisions, my metrics would be first see what is the return on investment, and then also see residual income. I cannot make a decision only on one number, because taking a decision on one number would be misleading. So I need to compare both to get the best. And then I should reward people based on divisional performance. I need to always keep a 2% haircut for my head office expenses, because when any department grows, division grows, there is some contribution of head office, because the head office started this company. So even my brand name, whatever is working, is giving you some edge. So 2% admin expenses we put for your division. That's a random number and fair to all. Here we are assuming 9% cost of capital. In realistic terms, 9% cost of capital is not realistic. Any idea how do we determine cost of capital generally? For exam purpose, it is 9%, but I'm real life purpose. If you are the owner of this company, how would you determine 9% cost of capital generally? Any quick thoughts? In a layman language, don't give me a technical jargons terms. In a layman language, how do you determine cost of capital? Any quick thoughts? Any quick thoughts? Cost of capital, first of all, what do we mean generally? Anybody like to give views? Priya, like to attempt? Priyanka,
by,
like to attempt?
by assessing the risk of the business.
Now you're getting complicated answer. Now, first, let me, as a layman language, I am a 10th or 12th class student to you, or I'm first year article to you, and I'm asking to you this question that what do you understand by cost of capital? So explain me as basics. I am very naive student. Then how will you explain me in a very layman language? I understand what you're trying to say. Technically, your answer is right. Technically, what you're saying makes sense. But I'm trying to know from a very layman language. How will you say what is cost of capital? Okay. Is it determined by the from the perspective of the investor or from the perspective of the company? What is your view, Priyanka?
Company's perspective, sir.
It is always from the investor's perspective, because I am putting money in your company, right? I am the investor. I am putting money in your company. Now, let's say you are into a dairy business. Okay. Now, if I am an investor, I want to set up this dairy plant. Let's say there is a company called Parag Food Limited, Parag Milk Limited, right? It's a listed company. And that listed company is giving average return of, let's say, 10% year on year. Every year, 10% they're giving dividend to their shareholders. That's the average dividend they're giving. Every year on a AGM, they give 10% dividend. Now you tell me what would be my cost of capital? 10 or above or 10 or below? If I would like to go for a company of Mr. This Wen company, which is unlisted company, Mr. Kardar Singh's company, and same business model, they would like to go. So Parag gives me 10% dividend every year. Now, when I'm going to invest in this company, what do you think my cost of capital? 10 or more or 10 or less?
10 or less, sir.
It should be always 10 or more. Why 10 or more? If by investing into Parag, I can get 10%, right? If I invest in an unlisted company, my risk is more or my risk is less?
Risk is more, sir, unlisted.
Risk is more. So when my risk is more, I will demand a higher return or a lower return
Sir,
as
higher
investment. It's a higher return, right?
Yes.
So that's why if a listed company can give me 10% return, then for an unlisted company, I will always ask more. I'll ask at least 11%. Because 10, I could have always got a listed company. I can exit anytime in a listed company. I have liquidity of money. But in an unlisted company, I will not be able to get exit. So essentially, what is cost of capital in a layman language? Cost of capital is the expectation from the investor that how much money I should at least get from this company. If you give me 15%, let's say my expectation is 11%. If you give me 15%, what do you think I will say? No, why are you giving me extra? Or I'll be happy with 15%. I'll be happy with 15%. I'll never question you, why are you giving me extra? My expectation is 11%, and if you give me 8%, will I be happy with you? Market है, चलता है, कम दे दो, or I'll be say no, at least if I would have put in a listed company of like Amul or Parag, I would have got 10% at least. So this cost of capital serves as a benchmark to take decisions by the management. That at least our investors needs minimum 10%. So I should not take any decision where my return is coming 10 or less, because I am answerable to my shareholders. Otherwise, the management can take any reckless decision if they don't know, if they don't have this scarcity that somebody is sitting on their head, and stakeholders are always sitting on their head because my cost of capital is my benchmark for performance. So in this case, for example purpose, they have taken 9%, though it is a very low. Practically, it will never happen now. Practically, generally, it goes in the range of 13 to 14% generally. And then we have a depreciation 15% on cost. That's a standard we put it, depreciation. Now we got the data of 3 divisions. 3 division data are available. One is giving 6.880 crores revenue. Just a sec. 6.8 crores revenue. Animal was doing 10.6. Crop was doing 6 crores. PBIT is there for all, 60 lakhs, 63 lakhs, 57 lakhs. Net book value involved is 5 crores, 7 crores and 2 crores, 1 crore, 1.5 and 60 crores. The animal feed division, he says, I am the best among all because I am making the best profit, highest profit. What are your views on this statement? By looking only in these numbers, can you make analysis? Yes, no, maybe. Any quick thoughts?
Yes,
Claim,
because sir, revenue of farms depends on revenue. It's dairy division 680, but TBIT is more. Here 10 crores is revenue, but 63. It is not thought process of animal feed is not perfect.
so that's why numbers in isolation will never give you a right picture. And the beauty of the numbers is if you're able to link numbers. So as a once you become, not only once you become, you are still also as a professional student, you need to always understand the linkage of numbers. People can make vague claims, but you can understand the claims better when you link the numbers. So just by comparing, saying out of 3 I am having the highest PBIT does not make sense. So you need to compare, okay, you are making 10 crores, I am making 15 crores, but how much capital are you employed, or how much revenue you are making to generate this profit, and how much revenue I am making to generate this profit? That becomes a huge story. So never make decisions based on absurd numbers or only less information. And that's why MIS is very important, and that's why ratio analysis or common sense is very important to pick. That just by saying I am having the highest number does not mean you are the right. Because you should add one more point. Is only revenue maybe the number, or I need to also see something more?
Plant and machinery is also important because
That is also important. Why and why this is important?
it is investment in plant and machinery.
Correct, absolutely. So you need to also see how much my capital is employed to run this. If you ask me, I'm making just a second. If I'm just making 57 lakhs by deploying only 3 crore rupees approximately, 2 crores, 2.6 is plant and machinery, and 60,000 is my working capital. So 3.2 crores approximately. So I'm still making 57 lakhs out of 3.2 crore, which is still a very good number. Whereas you're only making 63 lakhs by using 9 lakhs approximately, 9 crores approximately, which is again a not good number. So you need to also see whether I'm making money at what cost. So that is also very important to see. And revenue, any fool can increase. So when I say revenue, any fool can increase means, so the analysts and the investors. So those who do investments in stock markets, what do they see? They don't see whether the revenue is growing so high. That is not the parameter. So luckily because of our profession, I used to meet a lot of stalwarts who are into chartered accountants and who are into stock market at top heights of India, who comes daily on news channels and all. So they used to come a lot in our ICAI programs many times, and they used to say, just tracking revenue does not make sense because any fool can increase revenue. So we asked this question: how can a fool increase the revenue? This is a contradictory statement. We thought that only smart needs to increase the revenue. They say no. You just give a discount 50%. What do you think? Your revenue will shoot up or not? Logically, yes. If I give anything on a discount, my revenue will increase, shoot up. They say, will you say this is a parameter? Answer would be no. Then they say, then always look at EBITDA level or EBIT level to get the real sense. If EBIT is increasing in positive trend, then that's where the growth of the company is coming. So just by taking a number that revenue is bigger may not make sense. You may be selling at a loss, which is not commercially viable. That will not come into P&L directly. That will come into cash flows when you see cash flow from operations. So by the claim just on this number does not say valid. Now, if we go further to understand the return on investment and residual income, if we go further on this part, here we'll decide and see what makes more sense to us. So we got this PBIT numbers from what previous screen. Just give a minute. Then we got revenue numbers. Then we need to exclude 2% for head office expenses. So since it is already excluded, so we need to add them back to understand controlling operating profit because the numbers was net. So if we remove related party transaction 2%, which is our own cost, so now the numbers are coming 73 lakhs, 85 lakhs. How much investments we checked? 6 crores, 7 crores, 3.2 crores. Now if I check how much return I got on the basis of my investment. So my returns are 73 lakhs, investment is 6 crore 70. It is coming 11%, 9.5 and 21.6. Now, if I see in terms of ROI, the animal division is the lowest. Despite they were claiming that I am making the highest profit out of all three, but in ROI terms, they are just meeting the expectation. The expectation of the investor is 9%, and you are just on borderline. After this, we got ROI of dairy division, which is 11%, and the least profit, which was making, was giving the highest ROI, that is 21%. As an investor, if as an investor you come for me for fundraising, which division I'll tell you to put money more? I'll put more money on this division because it is giving me 21%. So my cash flows will be secured. Apart from this, they also need to see how much is residual income, how much money is left. Now 13,40,000 remains the residual income. The residual income is after giving what is expected by the shareholders. So if the shareholder expects 9% and I give them 9%, after that, what is remaining? So then remaining is again more in crop protection division. So that's what they started saying that when you make a decision, look into all data together and decide. So here we all can say that claim by manager was incorrect. It should be always crop protection, then dairy, and it is the least performing division. So we have seen which is better. His claim is rejected. So in fact, it was lowest in both the terms, ROI and RI, in both it was the lowest. And because of high capital investment, both become diluted. Just by making highest profit does not make sense. Now there's a business strategy known as Ansoff matrix. what does this strategy says? The strategy says we all agree and understand that market will get saturated at one point of time. You may have the best product, you develop the best product, but market will get saturated at some point of time. So either you need to develop a new strategy to capture a market, develop a product, or penetrate the product, or do a diversification. These strategies are considered one of the most best strategies in the business, apart from all the strategies of Pestle, McKinsey, and Porter 5 Forces. This strategy talks about there could be 2x2 matrix. It's a 2x2 matrix which starts with, let us first take with product, which you have existing product or a future product. And then we could have a market. Market is existing market or a future market. Based on this, we map things. Now, what is market penetration? Market penetration means you increase the sales of the existing product in the existing market. So market is existing and product is existing. So market penetration is increasing the sales. Now, how could you do this? Either you can give discounts, or you can do a collaboration with products. Like, for example, when Microsoft came, they did with AVG viruses, that AVG virus need to increase the McAfee need to increase their sales. So if I go and sell individual customers, they may or may not buy my virus scan. So they went with Microsoft. Said, okay, whoever buys your product, it will go along with it. So that's the addition. So market penetration, okay, out of this 4, where market penetration is focus on increasing sales of existing product into existing market. Market development is selling existing product into new market. Product development is selling new product into existing market. And diversification means new product into new market. Out of 4, which you think is most difficult, most risky? In terms of riskiness, out of 4, which you think is most risky? What do you think?
Diversification.
And why is that risky? Logics for it?
Because when we start a new entity, when we enter into the new market, there will be more risk as well as threat SWOT analysis, strength, weakness.
Fine.
Diversification is more risky concept of entering a new market with altogether new product. It's difficult.
So my research is not tested yet, because when you are developing a new market, so the highest risk ever in all the strategies of diversification. Now, diversification can be 2 kinds of diversification. One is a related product diversification, and another could be unrelated diversification. Let's say, for example, dairy products like Amul, right? So dairy, when you think of milk, what could be other byproducts come to your mind quickly, offhand? When you think of milk, if you want to start a business related to milk, what could be other byproducts come to your mind?
Butter,
Related to butter, cheese, paneer. Does chocolate
Curd.
comes to your mind?
Yeah.
But not often. But second, right? But it is not directly related, because in in ghee, butter, paneer, the major ingredient is only milk. You don't need to add much. You just need to do little bit cooking skills in it, some Fahrenheit degrees, and add some acid, and you get the product ready. But in terms of chocolate, you need to do a little bit more research, because though it has milk, it has cocoa powders and other things, so that will take care of it, right? So Amul started with dairy products and then come into chocolates. So that is also diversification. Product is new and the market was also new. Then this is still a safer risk. The biggest risk was which ITC did. So what was ITC first into? ITC used to be selling what first? It started with hotel first or cigarette first? Any quick thoughts? It started with cigarette first. So they were selling cigarettes. They were the pioneers in cigarette industry in India. They were largest cigarette sellers. But then they realized, going forward, due to environmental, due to health, or due to medical various issues, there will be a question mark on the products, because it is considered a sin product. So they diversified their business from cigarette division to hotels and FMCG. Now you can see how different this is. Somebody is selling cigarette and somebody is also selling biscuits. So it's a FMCG product also, ITC, and Sunfeast biscuits and all. So this diversification. So if I want to continue in the business, I need to do something out of this four. Even if you are having a good business, but you sit over, then it will get ruined. And if you want your business to sustain over second and third generation, you need to change something, because otherwise market is changing rapidly. So he decided to do something in this. Now, which one should be done what, depending on choice. So as I mentioned, market penetration is, you just need to sell existing product into existing market, where you can always use, because you have already base case example, you're already successful. So you can always use that example and increase your sales much. Market development is existing product into new markets. That is also possible. Say for example, burger or pizza. They all came from West. Pizza came from Italy to India. Now, the Europeans, do they like to have spicy food, or they like to have blend food generally? The taste buds of Europeans or French or outside India, generally West side, they like to have spicy or blend food generally.
So blend,
They are
not spicy.
not spicy, blend, right? They always like to have blend. But when I need to get burger or pizza in India, if I offer the same blend food, will it work?
Yes,
Or I
sir.
need some tikha, spicy, or that's what Indian markets want, right? And that's why, if I want to sell existing product into the new market, I need to do little bit research for that market. Market will be willing to take my product if my product is custom to their taste. I cannot expect the customer to adjust to my product. As a seller, I need to always adjust to the customer demands and customer taste and preferences. And that's why in some places, the product which works in one part of the country may not work in another part, because of change of taste preferences and habits. Product development goes into introducing new product into existing market. This is also a medium risk. This is also manageable, because introducing new product into existing market is, say, example of what we discussed, an example of milk. If I am having a lot of milk, I'm selling milk from last 10 years, let's say. So my supply chain management is fixed. I have regular customers. Now, if I have regular customers, supply chain management is fixed, then if I start adding new products related to milk, let's say which is the common demand, let's say take example of paneer. In terms of marriage season, paneer is the most sought after demand of paneer. So take example of paneer, butter, Laban or curd, these all products I start selling with these kind of product development, it will be very easier for me because I have 4 choices to make. When should I go and take this choice? When do you think I should take this choice and I should not do these first 2, 3 choices? As a human, we are risk takers or risk averse? As a human, psychologically, we are risk takers or we are risk averse generally by our grooming. We are risk averse. We like to safeguard ourselves. We like to have plan A, plan B, plan C. If this does not work, let us this. So we don't want to take blind risk. Okay. So we like to risk ours. So when should this to be taken? So the thought process of, again, academician thought process are which approach should be taken when that's the best strategy. So when we talk of market penetration, it should be taken when we have a high market share but low growth. Then I need to go for market penetration. When should I go for market development? That's exploring new market. When my local market is stagnant and I don't have any growth left. Say for example, I am selling Mercedes, and in my city there are 100 millionaires, and I've sold to, let's say, 90 millionaires. Now I don't have enough demand, enough supply left in this. So when I don't have enough supply, then I need to look for other markets. Product development starts with when I have a loyal customer base, but the needs keeps on changing. So I'll not have daily milk, or if I have a customer who has daily vada pav, then he may not like daily vada pav. Then I need to have something in comparison to it which he can have. So when you have a loyal customer base, and generally in terms of milk products, people don't try to try daily new milk. They like to keep same vendor of the milk because their entire habits. So those who like to have morning coffee, morning tea, or morning milk, they don't like to start their day with experimenting. आज कुछ तूफानी करते हैं, आज कुछ नया करते हैं, right? Do you like changes, or you like to have at least same taste of your coffee, tea, or milk, whatever you take in the morning first thing, or you like to experiment, or you want to have peace of mind with the same change? Same taste? What is your view? Again, nothing is right, nothing is wrong. We are just trying to understand how people decide. Are you comfortable with changing daily milk taste, or whatever you take, tea, coffee taste, or you want same standard?
No, sir, changing.
You like to change daily?
Daily, but
Okay. So because I know a lot of people, I don't know whether you have seen, have you seen a lot of people goes in the morning to Starbucks taking only same coffee every time, and without having that coffee, or any other coffee shop, without having any coffee, they'll not start their work. And the moment there is a little bit change in the taste, either the milk is more or the sugar is more, they make fuss out of it. Because as a consultant, we need to go and meet a lot of clients at various coffee shops, and we see these dramas in and out daily. So generally, customer is loyal, but you need to catch on, bang on the customer. Now, this diversification which you're talking of, changing new product, new market, this to be seen only when you're declining core business. When this is actually happening, when this is coming, then only you should start taking this decision. Because when you know that your business is actually declining, whether maybe a technology reason, whether maybe a regulatory reason, or any reason, in that scenario, when you start doing that, in that scenario, then you need to have a new product. So let's say if you take example of ITC, take example of cigarettes, Now, what could be other product related to cigarette you can start? Assuming you want to start cigarette business, let's say you are a division head of cigarette business, and you see cigarettes. Somehow people are, not taking much cigarettes these days due to awareness, or by seeing the picture of, when you buy a cigarette pack, and I'm sure you would not have bought a cigarette pack, but you would have seen in movies or somewhere, when you buy a cigarette pack, you see a picture on that, cigarette पीने से आपको cancer होता है. Maybe this might give some sense to the person buying it, and he may not drink it. Then my business is going down. Then what should I do now? What do you think? What do you think could be another business I can do related to this? Have you heard about e-cigarettes, vape? So the companies are now selling that product because they realize that now see, everybody's selling. If they are sellers, so they say, okay, if you're not taking cigarette because of whatever health reason now, then I'll give you a new product, old wine in a new bottle. Then I'll say, oh, it's a e-cigarette. It is very less in nicotine. Does not give you much. It does not give you much. It does not give you much harmful impact. It's good. It will help you. It will help you to get the same. It will help you to get the same level of kick with less impact. It's a healthy puff. Then you might tempt it to that. So then it's a diversification. So when declining core business, so similarly, as I mentioned, every business will become stagnant. Market will become stagnant. So you need to look into new avenues you want to grow. You can't expect to run the business with the same model forever. So now then they got a business that, okay, we are running into these products. Let's start a new business of frozen desserts, because now desserts is something which youngsters love it. All occasions people take it. And our dairy division, we already have it. It is just an extension of frozen desserts. We just need to add this new product. We have existing. So this is a product development strategy. We were talking of this strategy, product development, where add a new product to existing market. So this is a medium risk which we can play on. So they say, let us take a product development strategy, start a new business, sell a new product of frozen desserts. Now to start a product of frozen dessert, they say, okay, let us do so this is based on Ansoff metrics, as I just mentioned. This is a very famous metrics for taking decisions. So they say, let us start seeing, if I need to start a business of frozen dessert, how much capex it is required. Because we have dairy market presence and infrastructure, we have supply chain management, we just need to keep the product ready, and selling is a cakewalk for us. Now this is as I mentioned, in summers, everybody will take frozen desserts. In all functions, occasions, this is a product, it can be easily sold. It will increase your dairy product portfolio. It also increase your valuations. If I say I have a business which deals into product ABC, and I tell you I have a product business which deals into product A to Z, my value of A to Z will be higher because of number of offerings I have. It helps my brand to go better and deeper customer engagement. So they decided that, okay, if I want to do this, we need to invest in a plant and equipment of 1.75 crores. My working capital initially requirement will be 25 lakhs. If we do this, our annual contribution will come around 95 lakhs. My fixed cost will be increased by 8.5 lakhs. That would be fixed cost, sunk cost that has to be incurred once you start this project. Depreciation will be on plant and machinery. Now, if we do this product, if we take this assumption, then how much we get as a ROI? So 1.75 crores is additional investments. Depreciation will be putting 15%. So at the year end, our reporting date is book value will be plant and machinery is 1.48. Working capital 25 lakhs. So total makes 1 crore 73. Your additional contribution, your net fixed cost. So it all gives to 60 lakhs net addition to earnings. Now, how much is my ROE coming out? is 34.68. Is it coming even higher than crop division? Then for sure it is coming much higher than crop division. Now, because my required rate of return is 9%, and anything which is coming much higher than 9% will be always accepted by the board. So the board agrees here, and board will say, okay, invest in this. So they give a go ahead. Now, whenever we are making any plans, we need to always have best case scenario and worst case scenario. You should not take decision based only on best case scenario, because you never know what will happen in future. So I can't play with investors' money just by having one logic that everything will go good. There is a very old saying that that optimism and pessimism both are necessary to run in a business. You need to be optimistic that you will always get it, but on the back of the mind, you need to be always also pessimist. That what if it does not happen? Okay. Let me give you my personal story related to that. So when I was studying CA, so I thought my optimism was, okay, I'll pass in first attempt. That was my optimism. Then back of the mind, I was having a pessimism also, that okay, what if I do not pass in first attempt? Then for sure I can make in my second attempt. This way I was able to give both the balances to my mind, that okay, if something goes right, it's fine, you're supposed to do it. For some reason it does not pass, then okay, there is a second attempt. That was in mindset. Luckily in Inter, I got a gold medal in CA Inter, but that was not planned for. So when you do a business, you need to always numbers from both the sides. And I always say to all my clients and startup founders whom we do for valuations and all, I read more fiction in Microsoft Excel than Microsoft Word, because you can write any fiction in Microsoft Excel. How much it takes to multiply a number? You say, okay, I increase my sales by 20%, 40%, 50%, based on your gut feeling. Your gut feeling may be right, may not be right. But based on your gut feeling, I cannot let my investors' money at rest. So you need to always make assumptions that, okay, what if I don't get this kind of sales? What if I do not get, then what is the minimum I will at least make out? And that's what your moat is. That's what your risk-taking ability comes in. I'm expecting here 34%, but what if I get only 10%? Even if that is a worst case scenario, then also I'm above my benchmark of 9%. Imagine my benchmark is 15% and my worst case scenario is giving me 14%. Then I should never take this project, because then I need to balance it out. So my worst case should be at least able to ensure my stakeholders' money is protected. So here, based on these parameters and numbers, they get it. So they should invest in, and they're also making the highest residual income. Even after paying 9% on your total investments, I'm still saving 44 lakhs, which could be plowed back to business. So when you always look for ROI, you'll always accept it, which is the highest ROI that we just talked about. So they have taken this decision. Now, initially, when you start a business, you go by manual bookkeeping. Once you go by manual bookkeeping, then you go by a local software. Let's say you go with Excel, you start making books in Excel. Anybody has seen in any of your articleship, somebody's making books in Excel, a very small company keeping trial balance, everything in Excel, having no formal software. Has anybody seen that? Now I'm sure everybody will have some, because there are some many free softwares also. So you'll have some softwares. But then when you have multiple businesses, then you need to have always have an ERP platform. Then you need to have an ERP platform. Without ERP or any ERP, it could be it is necessary for entire business to sync in. Why ERP and all these are relevant? Why this why not this works in a local software or a manual? Why we need a ERP? Any thoughts? When I am having a business of dairy, animal feed, crop protection, multiple divisions, why ERP is relevant for me? Why can't I work on individual data and individual MISs of individual units and work accordingly? Any thoughts? So they were thinking to implement an ERP from a US based company, and they are charging 1 million for setting this ERP. My question is, why do you think ERP is relevant? Any quick thoughts? Any quick thoughts? What ERP will help me?
Accuracy.
Sorry?
Accuracy.
Sorry, I'm not able to get your voice clearly.
Accuracy.
Accuracy of for what? Accuracy for what? Accuracy for what? Like this accuracy is relevant for what?
For all the data.
Yeah. Now to take right decisions, what is the first thing I need to have? Right data. Correct?
Yes.
I cannot take any decision if I have a wrong data, because goods in, goods out, garbage in, garbage out. You give me a wrong data, I have the best model, but you give me wrong data. Will I give a good results or bad results? Bad results, because the data itself is the wrong. I have the best model, but the model will only work when the data is right. And to get the right data, real time data, I need to have ERP. By click of button, I should know how much inventory is lying there. Now, say for example, I have say for example, I have 100 cows. Okay, if I'm a dairy business, I have 100 cows. How do you think I should monitor those cows? Shall I put one person who in the morning, evening go and count each 100 cows, or how do you think I should do that? Monitor that just for a logic, just for an argument purpose, discussion purpose sake. Shall I put one person each, like one person in the morning and afternoon to keep counting 100 cows that they have not gone here and there, take care, or what would be the best way to ensure my cows are in my premises only, have not left my premises? Any thoughts? Any thoughts? Nowadays, there are automated trackers. You put a chip to a cow, you put a tracker to a cow or any cattle stock you have, and they with a click of button they will give you them all information, all the GPSs, where they are going, what place is available to them. These are all there. In fact, forget these. In fact, all big companies now stock counts are where they are having heavy products used in heavy expensive stock items used in, they're all based on electronic GPS trackers. This way, with a click of a button, entire stock counts happen. So they wanted to put a ERP. The intent of the ERP is to ensure that all data get together. So take for example of giving example of Asian Paints. One of the reasons why Asian Paint used to be considered one of the best strategic stock was they had information of that on a particular area, which color of is not there. That color has gone short. So let's say Asian Paints make 10 colors. Let's say all rainbow colors, and then you say purple, orange, or whatever different colors. 10 colors there. Now, how should I keep a track record when I have in almost 1,000 vendors and across state? I have given 10 products to each. I don't know which customer will be demanding which product more. They have that kind of data integrated to their suppliers. And that is the reason they immediately know which product will come demand more and they start preparing and working that. So their inventory time or their delivery, their refurbishing delivery time is much, much less. And because this is all because of data. And that's why they said, okay, let us hire a US based consultancy to implement customized ERP software. The benefit they can always have real-time data visibility. They can do automation of inventory and logistics. It will reduce in operational bottlenecks. You should know what is the demand coming in. It is like just, I'm sure in costing you would have read into minimum inventory, reorder level, just-in-time inventory. These are all relevant to ensure that your production process is not stopped. That's why you have some spare parts that the business does not get impacted. These help in alignment of supply chain. Once you know all products is needed what, your decision making and performance tracking becomes easy. And that's why all these data are ERP is relevant. They agreed. The cost of ERP is coming $1 million. So USD $1 million they are asking for setting up ERP. Payment timeline is pay after 3 months. Okay. Now, just to link you on INDES 16. Okay. So if I buy this SAP, okay, what would be my treatment in my books? Any big thoughts? I am paying $1 million for implementation of SAP. What would be my accounting treatment for this in my books? Any quick thoughts? Anyway, do we agree that Geeta, what is your view, Geeta?
So ERP is a software, no? So this is intangibles.
Okay.
This will not come in PP, you know.
Okay. Then where it should go? This is exactly what I was trying to see, whether someone pays attention to it or not. It will not go under INDES 16 because it's a software. It's an intangible. An intangible, we know something we cannot touch, see, and right feel. We need to put into intangibles. So I'll go under INDES 38. Now, when I'm putting under intangibles, I'll be capitalizing it, and based on let's say its life, the management can decide 5 years, 7 years, whatever the life management thinks will amortize over the period, right? Geeta, we agree on this? Okay. Now my question is, the next question is, so we are a farmer company and nobody knows how to operate SAP, right? Because we have never used it, we have never done it. We have systems that have SAP installed, ERP installed, that's a software installed, but nobody of us knows how to do that. So the promoter sends 2 staff to take the training, and he sends to attend the training of how to operate ERP, any ERP, maybe SAP, Oracle, or whatever you call it. The training cost, let's say, 5 lakh rupees for both. We need to go to Mumbai or Delhi or any other city to learn this, stay and all, and training cost is also 5 lakh rupees for both. What do you think should be its treatment? Can I add this in the cost of capitalization of SAP, ERP? Yes, no, maybe. What do you think?
No, sir.
And why no? Will you not? So your answer is right, but my question is why? The reason.
it is revenue expenditure, so it will go to P&L.
It will go to P&L. It will never be capitalized because asset, it is not related to putting to asset use. Asset was ready to use. You don't have the skills to use, that is immaterial. That does not count in standard. So standard has specifically mentioned training cost should not be capitalized at all. Because what if the employees leaves? Then what do you think? Then you will again deduct from the P&L, the fixed assets? Answer would be no. So the standards have clearly mentioned that any training cost needed to run the equipment should not be added to the capitalization. It should be passed to the P&L. Now here, we purchase this intangible, book days in our assets. I have a choice. We have to pay after 3 months. It is anticipated that after 3 months, there will be a depreciation in INR value. So as a prudent, as a rational CFO, we need to hedge the risk because exchange risk, unhedged risk is always risky. So we need to hedge the risk when we know there is a depreciation in value. So I need to make a choice. So there is a spot rate of buying and selling $85 and 3 months forward rate is expected to 87.63 or 87.90. That's expected. The borrowing rates in India are 8% in India and USA 5.5, and the deposits are in India 6.5 and 4 respectively. Now I have a choice. Either I take forward cover and I book at 87.90, then I need to pay 8 crore 79 lakhs. That's the liability I have. I have another option of hedging. I can go for hedging. Now, hedging is never for making money. Hedging is always protecting you. So in a hedging, what I can do is I need to pay after 3 months. So I deposit today. If I deposit today in USD, so let's say I'm supposed to pay 1 million after 3 months. So I'm supposed to pay 1 million after 3 months. Then if I deposit 990,000 today, then in future I will get 1 million based on 4% interest rate, whatever interest rate is there. Then I convert that spot rate. How much amount I need to deposit today in US, I convert into the spot rate, that is 85.90. So I need to pay today 8 crore 50 lakhs. Okay. Now, since I don't have this money, so let me borrow this at 8% interest rate in INR. After 3 months, I need to pay 8.5 lakhs into percentage of 8% by 2%. 8 is for annual, so for a quarter, it is 2%. So I'm supposed to pay 8.67 lakhs. 8 crore 67 lakhs. Now, this is the choice you need to make. So based on this, it is always better to hedge. Anything more you can find out from this? Apart from this, anything more benefit in this strategy? In this strategy, there is more benefit, something more benefit in this strategy. Now, what is that? And that is, I will also get interest expense shield. Whatever interest I'll be paying, 70 lakhs interest I'll be paying on that, I'll be also getting some tax benefit also. So we need to do not only from just plain mathematical numbers, I also need to see from tax and other impacts. So here I need to pay. So between these two options, I'll not choose 8.79 but taking a forward cover. I would like to go for hedging my payments and safeguard. Since we're just talking of tax, so just touch base on quick tax. Is income tax exempted on dairy products? What do you think?
No, sir. No.
So I'm doing a tea plantation. How much taxable? Fully exempt or fully taxable? Tea plantation activities.
Fully exempted.
Tea plantation fully exempted?
agriculture is fully exempted, but its products which are made by men are not exempted.
So I am having a tea plantation activities where I am selling tea leaves and all. Then how much would be taxability? Because it is mixed, right? It is mixed because I will be selling tea also. So here they've given 40/60. 40 would be taxable and 60 will be exempted because it's a composite activity. If I give my agricultural land on rental basis, so I say I don't want to do farming, I am a lazy person, I give you my land on rentals. You give me 1 lakh rupees per month and you do whatever farming you want to do, whatever proceeds come, you take it. You just give me 12 lakh rupees annually for using my agricultural land. This will be exempted or taxable?
Taxable, sir.
Taxable, sir.
And why it will be taxable?
This is not income from agriculture. This is land given for rent. That
So note this down and double check after this session. Even it is coming from rentals, it will be exempted. Even though I'm not doing farming, goods and service tax on milk, let's say Amul is selling milk. Will there be a GST on that?
No, sir.
That will be a exempt category, 0%. There is no GST on milk. But if Amul is selling strawberry milk on it, then it will be exempted or taxable?
Taxable, sir. Some process will be on that product, then that will be.
So if I'm selling plain curd, it will not be taxable. But if I'm selling flavored curd, it will be taxable. If I'm selling other products, if you sell ghee, if you sell butter and all, will be taxable because these are processed. So GST has a lot of complications. It is not as simple that it is agriculture product should be exempted. We need to check it that. We'll discuss more on accounting part of Index 41. Now, this ERP we discussed point that it is advisable to go for hedging because it will be cheaper. The objective of ERP we discussed, it will resolve warehousing issues, shipping issues, integration with the ReachMe logistic network. So ReachMe logistic is a network where it sells data. It is a logistic network. You need to sell any product to various people. It will help you in delivery timely. So that all we discussed. This will help us seamless coordination between divisions, data-driven forecasting and inventory planning. You can plan anything only when you have proper data. You can allocate resource properly and cost savings. You can strengthen Ven's vision of sustainable value creation. Now, they want to go for diversification strategy. So product development, we discussed that they are studying in the frozen dairy products. Now they thought of diversification. And they thought, what if we start a dairy farm, and if I need to sell milk and I need to ensure the quality of milk is ensured, then the best way to ensure is owned cattle. If it is of a leased cattle, the quality may keep on changing. And if it is leased, the other person may or may not take full care. So it is better. So even if let's say I lease 100 cows and I told to the farmers, I'll give you 100 rupees per day. You give proper fodder to the cows, proper food to the cows, so they can give me proper milk. Do you think they will do that, or they may or may not do that? Where they say, okay, let me give 50 to the cow, 50 I keep in my pocket. So it is probability. They may take care, they may not take care. Despite I'll be paying money to protect the quality of the milk. So the best way to do would be to have their own cattle. So buy their own cattle. Once I buy own cattle, and I can always make a premium product. Now, even in your cities, probably you must be knowing like Country Delight, Hudson, or there are many other private players have come in dairy products, which they say that we have a farm where we have Nilgiri guy or best quality guys, New American Jersey guys who give the best quality of milk, and we have dedicated one cow for you, which will be giving milk only for you and your families like this. Have you come this kind of advertisements or this kind of selling scheme by milk sellers? So this is happening a lot in many places, which they sell like this. And if I and when a person become wealthier, that is from a lower income group to a middle income group or a reasonable middle income group, they always like to have best quality of things for their family. They would not like to compromise on any eatable items for their family. So they will always like the best milk, and they don't want to have adulterated quality. So they would like to have best. Please, Geeta, please. Geeta, you would like to ask something?
Yes, so, sir, actually one case study is there in income tax.
Yeah.
That when agricultural land is given on this films actors for rent, then that rent is taxable.
Which case is this?
I don't know the name of that case studies, but I have read that.
No. Don't go on case study. Just go on the section 281. Go to the section 218 or 281 where agriculture income. If you have income tax act with you or income tax book, just go on that where we have income accruing from agriculture is what is exempted. Just search that. Just Google that, or just Google on that. If you have Chat GPT, you have just put on that income from renting land. Income
Okay, sir,
from
I will
rent.
do it afterwards,
Yeah.
but
Yeah.
I remember that case
No.
study.
What you're talking is of a different issue. It's not related to renting. The issue was it was related to Amitabh Bachchan and similar to Amitabh Bachchan, Aishwarya Rai, and many other film stars, that they have got they are not farmers. They are celebrities. Bollywood. They are actors, right? They are professional actors. So they have taken land in UP as claiming as they or UP and Maharashtra claiming they are farmers, because in certain areas agricultural land can be given only to farmer. So you need to declare that I am a farmer. So to declare a farmer, is there a qualification? I need to pass some exam. Like to say I am a CA, I need to pass CA final exam, right? And complete 3 years of training. In your case, it should be 2 years, I guess, right? So to claim I am a CA, you need to pass the exam, complete the 2 years training. But to claim I'm a farmer, do I need to do some degree, or I can just say I'm a farmer? What do you think? Is there a degree to be called a farmer, or I'm just asking? It's a random question I'm asking to you. What do you think?
No, sir, no degree for that.
No degree, right? No degree. Absolutely right. We understand. So I can say I have a small piece of land. I just need to have, hal fawda, and I can start digging and say I'm a farmer. Anybody can become a farmer. In fact, you can just Google that. You'll find an interesting case since you touched this case on agriculture and all. Our ex-finance minister, Mr. Chidambaram, he grown brinjals in his balcony worth probably some crores of rupees in a balcony, and it was exempted, considering it's a agriculture income. So similarly, all these film stars, they purchase farmers' land, claiming they are farmers, and then they given on rent, and then they have taken they've all given on rent or business and all. So then the question came on that are they farmers they have taken? They are not farmers at all. They have just filed a false declaration that they are farmers. They were all at film actresses, so they should not say they are farmers. But then it was discussed in court that to be a farmer there need not to be any degree and all. Somebody can be a farmer just by having a land and say I want to do farming. He will be a farmer. So that was one of the case laws, but it is not related to that. Their income will not be taxable. Their income will be still exempted. That's decided. That you can always check. Maybe we can also check during the question answers time on this. We'll double check this.
Okay, sir.
Okay. Okay. So they said that okay, we want to buy this dairy farm. Now, when you want to dairy farm, you want to buy cattle. And when I need to buy cattle, will it come into inventory? Let's say I want to have a dairy farm. My intent is to sell product, sell milk. That is my intent, to sell milk. So will we call it property, plant and equipment, these livestocks, or where it will go?
So PP.
So PP. So we will put into PP or any other head. So will you take them under Ind AS 16 or which head? Because the cows I'll be using the cows to extract milk. So will I take them under PPE logically, or should we apply some other section? What is your view?
So it's PP only.
It's PP only. Pakka. Okay. So we'll discuss. We'll need to go to Ind AS 41. Okay. Now, the reason of buying these cattle livestock is I will have full control over milk quality, because if it is my own cattle, I'll ensure that they are being nourished properly, they are given proper food timely. I'll also allow them to have music system. I'm sure you would have read the research that animals who are given to listen music give more milk than animals who are not given any music. That's a study done, and research has come on this. So that's why in some places they give music. They play music instruments for nurturing milk. By this, we can target premium products. I can always have a proper cattle management in Kangra, it's Himachal Pradesh. By doing this, if I have my own cattle, own milk, I can always have an organic certification and branding. This organic certification and branding, any idea how does it will help me? Where it will help me? If I get an organic certification and branding, where it will help me generally? Any quick thoughts? Where do you think? What is the relevance of getting this organic when milk is organic? But how it will help me? It will help me in selling at a premium price. If I say it is organic vegetable, I can sell at 1.2x. You will not question me that why I'm charging more, because I'll say it is organic. So it is free from any pasteurizer, free from any pesticides and insecticides. So you'll pay more for that. So by getting an organic certification, it will help in boost my sales and sales price. Both will increase. So they say, okay, let's buy this dairy. If I buy this dairy, I'll have high yield milk cows. As I mentioned, though we are the number one in the world in getting the milk production, we are the number one in the world, but our daily milk extraction is 4 to 5 liters from a cow, whereas US still today is 20 liters per day. It is because of the way the cows are taken care of. It all what boils down to that point. So let's say he said, when I have in-house breeding, I will always have this will be multiplying. So if I buy 100 cows, the cows will give the calves. It could be 2x, 3x, 4x. So whatever investment I'm doing now, it will help me in future. So that will be always beneficial. I can always have daily milking. I can have a cold storage, and I can make it for future. I can, or because I'm also thinking to have frozen products, it will always help me. I'll make a weekly distribution to retail distributors. Fresh milk will be there, no additives, no processing. People will pay premium for that. So they decided, let us focus on when's new dairy farm milk production will be the first. I need to buy a land at Dhagwar for 3 crore rupees. I need to buy 100 cows. If I do that, if I buy this land and 100 cows, the government will give me a non-refundable grant of 10 lakhs because I am buying 100 cows. So government has a scheme. Government also promote uh, animal business. So they say, okay, we'll give you a scheme. Now, what is the treatment of grant? Any idea? What is the treatment of grant? Shall I put in P&L or I put in balance sheet? Where do you think it should be put? Shall I?
Yeah, we will.
Sorry, Samir.
P&L.
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 Okay.
P&L.
All grants should go to P&L or what do you think?
We can
All
we can show as cost minus grant, cost less grant in the balance sheet.
okay.
Or
Some
the
non-refundable grants are in PPL, and which are like assets are purchased, and on that, if grant is given, then we can reduce from it.
Okay. And what if the grant is given with certain conditions that you need to
It's
follow
given
this condition?
for if it is given for certain condition, we will recognize deferred income.
So absolutely right. So where you have IAS India's 20 government grants suggest this treatment that when it is non-refundable, no conditions attached. You can straight away book to your income. You can say it is your income. But when there are conditions that okay, I'm giving you this grant, but you need to do this, certain conditions, certain milestones, certain obligations on you, then you cannot put entire into income. You need to show as a deferred income and treat accordingly. So here they are also getting this, though it's a non-refundable, so it will go into P&L. Now the operating expenses would be 12 lakh would be needed for animal care, 5 lakh would be needed for breeding fees. Now, during the year, 20 calves were born. During the year, 20 calves were born, but no changes during the year. As on the year end, I have 10,000 liters of milk in cold storage. I extracted the milk, but that is put into cold storage for securing. I sold it after the year end at a market price consistent. So normally in a milk, generally the market price is consistent normally. Now the land is at 3 crore rupees. On October, when I purchased, it became 3.1 crores. And March 26 year end, it is 3.15 fair value. The milk, which was 40 rupees on April, turned to 45 rupees at the year end. So during the year, 5 rupees have increased. The newborn calf, so we have calves. April it was 30,000. By March it went to 40,000. 6-month-old calf for 32,000 now went to 44,000. 42,000 3-year-old cow when I purchased, now it become 50,000. 4-year-old kind. So the prices increases. So the fair value increases of these respective livestock cattle. Now, as per India's 41 biological assets, what do you think is the treatment? What do you think is the treatment for this increase? Where should I take this? Where do you think I should take this?
So we will take the profit account. Fair value cost we will recognize. Yeah, we will do
So as per Ind AS 41, we need to treat them as fair value through P&L. So whatever increments is happening, whether up or down, I'll put into P&L and book the gain accordingly. So this I will. Okay, now how should I record this newborn calves? How should I record this? So I purchased, it was 100. So it was 100 cows. Then I got 20 cows, 20 calves. How should I record this? Because this, any thoughts? How should I record this? So what should be done? Whatever fair value changes, it should all go to P&L. Whenever you have a newborn calves, because it was, you have not paid anything, it was zero for you, there is no cost incurred for it, but you need to add under biological assets. Whatever is the fair value, you add in them, pass through P&L. Whatever grants have come, you book into P&L. Milk also you extracted, you don't pay anything for milk, you don't bought the milk, you extracted. So whatever is the fair value on that becomes your income, you put into there, and then it added to inventory as a cost. Then maintenance, whatever you incurred for breeding and maintenance, that becomes your expense part. So overall you are making 33 lakhs and paying 17 lakhs as expense. So average 50% you are making your profit. Land, if you, it is up to you, you want to decide to put at land at cost or at fair value. Shall I, this agricultural land, so I bought agricultural land. This agricultural land, shall I put into Ind AS 16 or Ind AS 41? Any quick thoughts? Where do you think we should do?
Sir, it will come PPE, sir, not under Ind AS, Ind AS 41.
And why is that so? Why you think it should not go under Ind AS 41? Agriculture?
It is not biological asset. No?
Because it is not a biological asset. Because what does Ind AS 41 says?
It's talking about only the bearer
yes.
plant and the biological.
It only says I will only apply this standard to biological assets or agriculture produce at the point of harvest. It does not even say about tree. So certain trees who are bearer plants will go under PPE. Right, absolutely right. So like you have a tea bush. A tea bush will go under PPE, whereas the tea leaves on that tea bush will go under agriculture and Ind AS 41.
Yes.
So that's the way, and you will be surprised to know, and you should be happy to know that majority of Ind AS 41 and IS 41 is contributed by our ICAI India. Because when IFRS was being written on this Ind AS IS 41, we were very, very expert in agriculture since 1970s. We are having very high GDP portion, and we were one of the leading producers of milk and other products in the world. So IFRS took a lot of our inputs, and our lot of input sessions were taken in IS 41, which now in India we got Ind AS 41 in doing that. And that's why you see our IS 41, Ind AS 41 is having less carve out in them, because it is all as per Indian recommendations. So land will not be fair value. If you want to make a policy, it is your choice. In IS 41, Ind AS 41, you don't have a choice to fair value or not. Everything is at fair value. Like cows, biological assets, milk, harvest product will be all at fair value. Land, because it is not coming under Ind AS 41, it is under PPE. It is the choice of the company. They want to put at cost or fair value. Both choices are available to them. Now they wanted to go for expansion strategy. They say they want to go for new market, pesticides and insecticides. They say let us Punjab, they have already covered up. So expansion is when you have an existing product and a new market. So they want to go for a new market, Haryana and Uttar Pradesh. That's what they want to approach for. Now they identified the way that we can go from Punjab to Uttar Pradesh and Haryana. And we need to understand every market, though the business may be same, but the person doing the business will be different. Like, for example, if anybody would be into Punjab, would have seen Punjab, there are 100 acres of land or huge 1,000 acres of land with people for doing farming. So we have a huge belt. So I used to do a audit of a company that sells tractors. And when I'm saying tractor, it is not a small tractor. The tractor will cost not less than 10 crore rupees. That's a tractor they used to sell. 10 crore rupees, 20 crore rupees tractor. Because when we are talking of a 100 acres land, you need a very big machine size. So that tractor they were selling. So they were able to get sell in Punjab because of the size and the belt. But the same company was not able to sell the products in Haryana and UP or Bihar because here the land size was small and the farmers were in rural pockets. So if you have a small farmer, they can't afford a 10 crores or 20 crores truck or a tractor to do for agriculture farming. So then they used to make a small machines for that. So you need to change accordingly. So they realized that if I go to small farmers, they will be needing crop protection division. They need be needing pesticide insecticides. Currently, these small farmers are buying through agents. Because of agents, margin is reduced because the agents charge high commission. So they say, let us focus on, and SEBI and urban areas are highly competitive. So they say, we should focus on rural penetration. Because if you can give us less price to rural farmers, by avoiding agents where you can also make money enough and they also need to pay less money, they will become your regular customers. But then they realized our biggest challenge is we have never no warehousing outside Punjab. We have never shipping infra. In Punjab, we have entire area with us, so I could logistically was not an issue. But if I go there, it becomes a challenge. We have a ERP system, but that is only for technology. It is not for a substitute of physical infrastructure. If I need to have a warehouse in UP and Haryana, I need to have a warehouse. It cannot be sustained by any AI technology. It needs to have a physical. Because it cannot happen that my farmer gives a order today in Haryana and I say it will come after 7 days. That will not work. So if he's given an order, I need to have a delivery by next day. And that is the reason why you see all companies who sell their products on Amazon, how come they sell, you put a demand, those who buy on Amazon or Flipkart, how does it happen that you place an order today and by next day morning it is at your doorsteps? How does it happen? Because each state and almost in each cities, Amazon has taken a warehouses. And in all those warehouses, Amazon has asked these sellers to put their products on a shelf. So let's say I'm manufacturing a toy products in, let's say, Bangalore or let's say in Bangalore. So my production is on all Bangalore, factories in Bangalore, but I'm selling on online. So what will happen? Amazon will say, okay, based on your demand, we have 20 stores in India or 27, let's say in each state we have one store. Put in each state one location your 10 products. So I'll put one in Jaipur, one put in Delhi and other states. The moment somebody from any respective state, so my factory is in Bangalore, but if somebody from Jammu and Kashmir places an order, next day he will get a delivery. Because in Jammu and Kashmir, I have also put the same product in a warehouse. Because if you delay, customer will not get a satisfaction and he might change his mind. So, and there are certain products whom I cannot wait for long. So that's why they say we need to have an infrastructure in different cities. And initially stage, I could not like to have a high infra investment because I'm still testing the new market. What if I'm not successful? What is the problem in taking a warehouse? Why do you think it's a challenge taking a warehouse? Any idea? What is the risk? What are the practical challenges of taking a warehouse? Practical challenges? Because I'm trying to explore new market. And a new market, I know the first condition would be I need to set up a infrastructure. My question is, what is the challenge I will face in getting a lease? What do you think?
So high investment.
How do you think it is a high investment? Because I'm not buying it. Then why you think it will be high investment? If you are aware, if you have seen any lease agreement, you will get an idea, especially of warehousing. Generally, what do you think the lease are for these kind of projects, warehousing? Generally, how much? What's the minimum period generally they put?
Generally 5 years, sir.
Generally 5 plus 5, or if you are a, I will as a tenant, I'll ask for 5 as a tenant.
Yes,
If you are
sir.
a landlord, you will settle for how much? For 9 years. Generally, the landlord says, I want a lease for 9 years because I don't want you to take a building. Because why they ask for 5, minimum 5 and 9? What is the rationale of 5 and 9? If I'm taking lease for warehouse or whatever reason, will I do changes as per my needs? Because I need to put things there, right? I'll put my own machines, I'll put my own ranks, pallets, or whatever way I need to make internal changes. If I leave in 6 months, 3 months, will I damage the property? I'll damage the property. And no lesser, no landlord will like to give a property for 3 months, 6 months short term that, okay, you come and try business in our city. If it works, then you continue. If it do not works, you leave. That he will not willing to do that. So taking a lease is a very, very expensive affair, even though you're not buying the property, but by putting a condition for staying 5 years put is a very expensive affair because for some reason if my business does not work in 6 months, 1 year, and I need to wind up, I need to have 4 years extra cost on my head, which no rational businessman would like to pay it. If I don't pay it, then he will sue me to the court, and I need to pay more expenses on lawyers and other things, which is not any businessman would like to get into this kind of mess. So the challenge will always on. We cannot go for leasing because and I cannot buy infrastructure, so we need to find another way out. Then they say, okay, I can do a partnership with a Reach Me. Now, what is a Reach Me? Reach Me is a e-commerce platform. So it is just like Amazon for buyers and sellers. In this platform, they provide a marketplace to the sellers and buyers. They also provide warehousing and shipping for additional fee. Just like Amazon started, they also used to do packing for you. If you say you are a seller and you don't know how to pack, they will also do a packing for you. You just pay them extra. Seller fees will be charged to VN. What a fees? Subscription fees is charged to buyers. They also give you access to new markets without upfront cost. So let's say I'm having so take example of Amazon. I'm just giving example of Amazon, not promoting Amazon, just Flipkart, just to give an example. If I'm selling in Amazon India and my product is good and it is one of the top sellers, Amazon people will come themselves to me and they will say, okay, Sumit, we see in your product doing very good in India. Why don't you join us, our program, pay a little bit extra subscription, and why don't we open the door for you for US market, UK market, Africa market? Because they just need to, it is plug and play model for them. They already have the infrastructure built. They need to do nothing. They just need to give me one space on their internet and on their web page, and based on my algorithms, my usage, my search engine, I will come on first, second, third pages wherever depends on organically where I can come. So they got an offer from Reach Me that you can partnership with us. We can give you a platform where we can work accordingly and work on this. The benefits are for this benefit should be I will get a rural market access here in UP. I don't need to rely on agents because I'm directly interacting with the farmers, which is the end user customers, and my data could be always interlinked with. I can always align my data with ERP and Reach Me platform because I can give an access. Reach Me, I can give them access to my platform. They can sit on my server, get an access, can find out how much inventory I have. So there is no challenge on that. Now these are few points we just discussed. Now I'll take some questions and then I'll take some MCQs and then take one case studies. Now the land on which VN has its dairy farm operations at Dhagwar is an agricultural land. Now based on this, which of the statements you think is true? Income from dairy farming can be considered agricultural income and exempt from tax. Income from dairy farming can be considered agricultural income like traditional activities as related to agricultural land. Income from dairy farming can be considered business income and is non-agricultural income. Income from dairy farming on agricultural land can be apportioned between business income and agricultural income based on certain predefined ratios. Which out of the four you think could make sense?
D, sir, D.
B. B or D?
D,
Bombay or
sir,
Delhi?
D. Fourth one.
Fourth one. Okay. Now the correct answer is income from dairy farming is a business income, as a non-agriculture income. So as I mentioned, dairy farming will not be considered as a agriculture income. It will be purely considered as a business income. If I'm extracting anything, then it does not take a business income. So let us take a break of 10 minutes. In the 10 minutes, we'll come back. We'll discuss on IS 41, just to touch base on agriculture income index 41, agriculture products, little bit on PPE, and on income tax, whether the rental of lending of renting of land, agricultural land, if I'm getting rent from agricultural land, will it be taxable, not taxable? That also we can come back. Okay. So let us resume in 10 minutes. Okay.
Okay, sir.
agricultural land question, Geeta, was it you, Geeta, or somebody else who asked this query on agricultural land renting? So see, if we go to section 10.1, so it is exemption that if there is agricultural land which is used for agricultural purpose, the rent received is exempt from income tax. Okay. So the conditions need to be fulfilled for getting this exemption is the land must be in India. It should be used for agricultural operations. As I mentioned that I told my neighbor that you do a farming, just give me 1 lakh rupees per month. It should be considered. Lease must be for agriculture, who has taken rent, and I should be the owner or lessor, whichever it would be. Okay. So this part we are all clear?
Yes, sir. Clear, sir.
Okay. Now a second question to this. I am a cold storage company. Okay. I store the fruit, the vegetables and all in cold storage. I have taken your agricultural land for this purpose that, okay, on your land, I'll put this cold storage because you are in the key center of the farming area. Based on that, I've taken your land. Will that be exempted income for you or taxable?
It is a taxable income, sir.
Taxable.
And why is that taxable?
Because it's
Because
agricultural operations are not going on that land. That's why.
So even if the cold storage that is used for storing agricultural products, it will not come under agriculture operations, and that's why it will not be taxable. It will not be exempted. It will be fully taxable in the hands of the recipient. So that's why when we read income tax, we always need to read income tax not just by letter in spirit. And every language of the section makes an impact. So we need to always read the act and so we understand the Google, ChatGPT, these are the sources where we take our inputs. But as being into this field from last 22 years, I can always say you will become the best consultant one when you first read the bare act. Because when you read a Google, ChatGPT or any article, you are reading somebody else's interpretation, which 99.99% will be always right. But there could be 1% chance of biasness of my interpretation. So one, you need to always read law on your own because letters are same for everyone. If you can read and interpret in your own way, you can always understand it always better because then you can link the sections and then you can always find what does law permit and what does law do not permit. So I'll give you an example. When giving gifts, when you are receiving gifts, then it used to be earlier. I'm talking of old days when you receive gift, it was exempted. So what was a lot of people were doing? A lot of people were giving gifts. So let's say I have a lot of black money. Okay, then I'll give a lot of gift to you. You may be a bureaucrat, a politician, or anybody else. So this way, people were giving gifts to other people and making income white because it is not taxable. So people were giving gifts and all. Neither the person who was giving was questioned because under income tax you cannot tax a person who is giving gifts. You can always tax a person who is receiving. So then they said, okay, people are misusing gifts. So they made a rule of gift tax under section 56(2)(10). That okay, now if you give gift of rupees more than 50,000, then it will be clubbed in the hands of receiver. So that means if I give gift of 50,000 rupees to you, it will be taxed. Then people started finding new way out. It was written, if you give gift of rupees, it was mentioned if you give cash gift. Then they started making heavy ornaments as a gift. So one of the politicians in UP was gifted a hair band of 5 crore rupees. So a person has gone to the jeweler, bought so many diamonds and all, purchased the diamonds in his own name. Now put into a hairband to one of the politicians, make it as a gift that it's a hairband. Now the hairband is worth 5 crore rupees just by adding studded diamonds. Does the law put tax on it? Law did not put tax on it because law was mentioning at the only if you receive rupees, she did not receive rupees. It was in kind. Gift was received in kind. Then law later on amended. So one need to read law thoroughly. So as I mentioned in terms of exemption, it is exempted if you read if you rent out your lands. Similarly, in this, even if it is a dairy farming, we cannot say it is a composite income. Income of tea plantation will come into this part. Dairy farming will not come into this because dairy farming will consider it purely as a business income because there is nothing related to agriculture in it. You are just processing on it. We'll go to Index 41 also for a minute. Now, we discussed this point. I'm sure this we have discussed that when he says that if I need to increase economic value added of a division, which statement do you think makes right fit? If I need to increase any division's economic value added, which statement do you think can fit right? So,
Option A.
So it is a correct answer. I can always increase operating profits without investing more capital. Putting more capital does not guarantee that your profits will be increased. Your profits will be increased by rationalizing your operations. Either you control your expenses, you control your wastages, then also operating profits can be improved. If you go with the right process, operating profits can be improved without investing more capital. And that's why they say hiring more employees also does not guarantee that you will increase your business because employees can be on both sides. They can be assets, they could be liabilities also. You hire a right set of team, it will be a asset for you. You hire a bad set of team, it will be a liability for you. So that will damage the business. Reach Me follows which kind of business model? That is, I'm sure we all know that Reach Me is a platform which is giving. It is a digital platform model. When we say digital platform model is you only provide a marketplace. Like take example of Amazon and Flipkart. What is the drawback of them or what is the condition of them to run in India? They can only provide platform. They cannot hold inventory in their name. So it cannot happen that Amazon can buy a lot of stuff from various sellers and hold it on their platform and then start selling. Amazon cannot do that. Amazon is only there to provide a platform independent from sellers and buyers. Otherwise it will be damaging the market. So what Amazon can do, Amazon will buy all mobiles from all the sellers, buy at X rate, and I start selling at because I have a monopoly in them, then I will damage the market. So that's why you're a digital platform model. Now, do I need to take RBI approval for remitting $1 million? If I need to pay $1 million to a consultancy services, am I supposed to take RBI approval for FEMA regulations, or it is not required because it is within the limit, or every payment you make out of country you need to take approval, or because we are into agriculture activity I don't need to take approval? What do you think?
Sir,
So the limit is up to $1 million. If you pay for a consultancy in a year, you don't need to take RBI approval. So that is within the limits. So I don't need to take any prior approval because RBI has set up a rules that for every payment, if you go to RBI, then it will not function in a country. So they have set the rules that where it is needed, where it is not needed. So similarly for this, it is not needed. You can skip it. Now let me take you quickly to Ind AS 41, just to take some extracts to make you understand what is there. Just a minute. Now, in a biological assets, so what happens in a agriculture standard? So Ind AS 41, they, as I mentioned, this standard is a unique standard. This standard always put everything at fair value through P&L. It does not have an option of cost. This standard is used only for biological assets, agriculture produce at that point of harvest, government grants covered under 34-35. It does not apply to land. So the point we discussed, even it is a land we have taken for agriculture activity, will not go under this. It will go under either Ind AS 16 or investment property, whichever you have classified. It does not apply to bearer plants related to agriculture activity. Even if by putting a plant, it will be having agriculture, the bearer plant will go under Ind AS 16 because that is a property plant equipment, though the leaves on it would be under Ind AS 41. Government grants on bearer plant will not go because that will go under Ind AS 20. And any intangible assets related to agriculture activity will not go under it. So maybe you are developing an app related to agriculture activity or something intangible assets for it. That will not go under here. It will go under Ind AS 38 only. So certain things, just a second. So this says that we apply on, this standard applies to agricultural produce. Which is what? Harvested produce of the entity's biological asset at the point of harvest. After the point of harvest, Ind AS 2 applies. Okay. So this standard does not apply after harvest. So for example, if you're growing grapes and the grapes turn into wine by the process, then wine does not become an agricultural product, or wine does not have an exemption of agriculture. Till grapes, it is a point of harvest. Beyond that, it does not. Logically, somebody can say it is an agriculture activity. Someone can say that turning grapes into wine is a natural process. You put wine in 2 years, grapes in 2 years, it will become a wine. You cannot say it is extension of agriculture activity. Arguments wise, I can always say that. But then, even though it is having a biological transformation, it will not be coming under the definition of agriculture activity in this standard. So they have given certain guidance what could be considered as an agriculture up to point of harvest and after that. Say for example, wool comes after sheep. So every sheep carries wool. The wool is considered agriculture produce till the time you harvest. But from the wool, I can make carpet, yarn, cotton, whatever I am making it. That will not be considered as agriculture produce. That will be treated and taxed separately. In a timber, it will be treated as trees. But once you cut timber, it will go under product. Similarly, like dairy product, what which you are discussing, as long as it is milk, it will be considered as point to harvest. From milk, you make it cheese, paneer, ghee, butter, whatever you make from curd. That will not be come under agricultural produce. That will come under dairy products. Like similarly, in terms of tea bushes, picked leaves will come under agricultural produce, IS 41. Though the tea bush may come under Ind AS 116, depending on Ind AS 16, depending on bearer plant definition category. But the tea will be a product. So this is based on standards. According to this standard, they have defined what is agriculture activity, what is bearer plant. They have defined bearer plant so that bearer plant goes into Ind AS 16. And then they have also defined on fair value. Fair value, we need to always follow Ind AS 113. And where you are, so theoretically, recognition should be always done at fair value. So normally you will see in all standards, we always recognize that initial transaction value, initial cost. You recognize that cost, and then you have a choice to put it at fair value or put it at cost generally. This standard straight away says you always need to recognize that fair value that can be measured reliably. In case you don't have a fair value, then you go to the cost. So first is always you go to fair value. So biological assets will always be measured at a recognition, and each reporting period you need to go for fair value. Except where you think it cannot be measured reliably, then you continue at the carrying price. But in most of the cases, you will be able to find fair value less cost to sell. Though practically it is very easy to say in standard, but practically in real life, it is very difficult to ascertain fair value at times. Now, how do you give fair value of a cow? Based on market prices. How does the market prices determine? Based on recent transactions. How does the recent transactions occurs? Based on actual cash flows. But do you really know that? Did you are getting that? Do you have the market to capture the actual transactions happening? Probably no. So that becomes a challenge. So most of the times people try to get from the basic hearsay, but there is no authenticated data where you can say, okay, this is the fair value of a cow. And can you say fair value of all cows will remain same? Probably no. Each different breed will have a different fair value. So this becomes practically very challenging for a valuer. So they go generally based on last transactions happen on this. I don't know, did you ever seen auctions of animals in UAE or in Rajasthan? We have a place called Pushkar. You just Google Pushkar Mela. At times, one cow is sold for 51 lakhs or 1 crore, just one cow. That is one of the cases. We cannot take a benchmark that, okay, this a cow of a certain breed is sold at 51 lakhs or 1 crore, then it becomes a fair value. Because auction may not always give you the best fair value. It could be a sentimental value, it could be emotional value, or participant specific value. So that becomes a challenge. But again, that's what standard says it, that you need to put it choose the market as a basis of pricing. What attributes are used for market basis of pricing? That needs to be used. Okay. Where you are not able, and whatever gain and loss you do, you always put into P&L. It does not go into other compressive income. It all goes into P&L. And that's why it makes it's very volatile. Just a minute. Any idea how much would be the? Let me. I want to take you to one of the annual reports of just one of the annual reports of just wait. Just give me. So this is one of the company which is a listed company, Parag. It is this Parag Milk Foods Limited. So just to show how does a dairy company generally shows. So what does they do? The biological assets, whatever they put, cows and all, they always show separately. They will not show under property, plant and equipment. They will show separately as a biological assets other than bearer plants. That's the terminology given in schedule companies at schedule where you put this, and in this then any changes happens. So let's say last year it was 605 million. If they added something, that will be added here. If not, then there is a change in fair value that will come here. Okay. Just to get so let's say there just to give an idea, it's a Parag Milk Foods into milk and related products. Their turnover is somewhere around 3,000 crore, 3,000 crore, 3,000 crores approximately, 3,100 crores approximately. That's their turnover. Any idea what would be the turnover of Amul? Any vague assumption? What could be the turnover of Amul? I'll take you to note 6 to explain. There's more than 61,000 crore. The revenue is 61,000 crores. Top line. Just a second. Now, how does they do that? So this is the disclosures they give for livestock cows, which is their product, which is their asset in their balance sheet. So they do not purchase anything. So they either sold or disposal. So whenever a cow dies and all, then they also show it and they sell it. Or whenever a cow stops giving milk, then most of the people, most of the farmers, they abandon the cow, because then when it is not giving them milk, they think that it is a cost to them, because then they need to feed them unnecessarily. So that's why they dispose them or they put on the roads and all. And that's why they show disposal. And then any changes in fair value, they are there. So this 175.96 changes happened. Now, how does a fair value changes of a cow? There could be for two reasons. One, they would have given a birth to a calf. If that's not the happening, then also if it's a cow which is 3 years old cow, which is a cow which is 4-year-old cow, will have a clearly mentioned here that there have been no purchases or acquisitions of biological assets during the year. So it is only on the account of change of biological transformation. That's the way they increase. So this is all on farming. Just a minute, just to give you one more data on your the data which was talking. So I was giving an example of GST rate. So in Amul we have 61,000 crore turnover of Amul. 61,000 crore. Imagine in a year with how many farmers they are connected. 36 lakhs farmers. So 36 lakh farmers. Now Amul has started from milk, started selling butter, paneer, ghee, cheese, curd. They have ice creams, they have chocolates. You name a product, and there are more than 30-40 products in product portfolio. So so they have 400 dairy plants across India. They have approximately 18,000 societies, consumer farmer societies connected, and 36 lakhs farmers are daily associated with them. Any vague idea how many million liters per day they procure approximately? How many million liters milk they procure approximately? It is 28 million liters per day, which is the highest across the globe, across the world. As I mentioned, in India, we are the highest one. And in India, they are the highest one to produce this kind of milk. Their strategies, they remain local. They connect it to the direct end user farmer, avoided the middleman to much possible extent, and that's why they made a in every village they made a chain, and that's why their chain system becomes so strong that whatever they want to make product, they can easily control, and that's why they are running from last so many years, and they have made a cooperative foundation. Now, regarding GST, so I'm sure you all would have reading sometimes interesting debates on that. Ice cream will have the highest GST of 18% because it has sugar and processing content more. Whereas if you take off flavored milk, it is 12%, ghee 12%, butter 12%. So these are generally GST rates. So at times, kulfi, at times they say if you sell flavored curd, they charge more. So they say sell a plain curd and give sugar along with it to make it sweetener. It will have a no GST. So there are various challenges in GST. Many times people do jugglery in GST to change the nature. So one should take expert opinion before classifying your product. Always check whether your product is coming into the correct category. Just to avoid GST, do not put any categories, because nowadays, as I mentioned, the data, government has a lot of data, and how you are transacting, they know. So this is broad on GST on dairy from my side on this case study. Any quick question you have, which I can take? Else, if you have any general question, then say Deepak ji can answer. If you have any specific question for me, you can ask me. We can take it.
Sir, I have one general question with respect to IBS. Sir, the set A and the set B is applicable for IBS as per the study material. So when I look into the study material, it's updated up to 2023. Can we consider that books and study for examination?
You have to read that study material with applicable amendments, and all applicable amendments are already uploaded on website. You may find in study material section of set A.
Okay, sir. I can continue with that 2023 updated study material. In addition to that, I need to refer that updated amendments.
Yes, for this you have to refer updated amendments, and updated amendments are already uploaded at study material section, and you may find below study material in corporate law section.
Okay, sir. Thank you.
Thank you, sir, for sharing real life experience. Student, this is time to put forward your questions. Students, today I received a call from a concerned parent whose daughter is finding it difficult to face IBS exam. She feel it is too challenging and questions why she needs to study a paper when she has already cleared some papers earlier. I explained to both the parent and the student that the IBS paper is not repetition. It is about integration and application. Please note, this paper is about integration and application. This is a conceptual paper, and with a strong understanding of concepts, it can absolutely be cleared. In fact, conceptual clarity is key to success in this exam. I also reminded them not to think IBS as an isolated subject. I have already advised selecting one or two paper from group 1. Okay, please select one or two paper from group 1 based on your personal interest or comfort. You may either select FR, audit, AFM, any subject. This approach not only increase your chances of passing the exam, but also add immense value to your professional career. Okay, think in this way. Instead of clearing two papers, imagine you are preparing for four papers. That's the level of preparation we aim for a build competence. Okay. Moreover, this paper align with international best practices. Please note, this paper is aligns with best international practices, where a multidisciplinary paper or integrated case study based paper is attempted only after building a foundation of other core subjects. Okay, IBS follows the same logic. It tests not only what you know, but how you apply what you know across domains. One more important point, this is an open book exam. but not an open hunt for answers. Okay, open book resources are helpful only when you already understand the concepts. They are tools to support your thinking. They are supporting tools for your thinking, not substitute for it. Okay, if you walk into the exam without preparation, open book material won't help. As for set A, you must have a basic understanding of key legislations like the Companies Act, SEBI, LODR, and FEMA. The Companies Act is applicable to almost all companies. Okay, if if foreign currency is involved, then automatically FEMA or fair FCRA, etc., will be involved. Okay, you can expect around 15 to 20 marks question from here. Similarly, set B, you cannot ignore strategic models like put up five forces, supply chain management, value chain, McKinsey 7S, or Altman's Z score, etc. These frameworks are very essential for any strategic decision. Okay, to capture or to control the concept, please make mind map. Your own notes or mind map are very important. In conclusion, this exam is designed not just to test memory, but to evaluate your ability to think, integrate, and apply concepts. Uh, in my chat box, there is one query. If a case study has tables, figures, or financial ratios, how much analysis I needed? Focus on what is needed to answer the question. Focus on requirement. You may not have to compute everything. Instead, scan for trends, indicators that support a decision. Okay. Again, there is query, how do I ensure that my answer reflecting strategic thinking? Consider long-term impact. Whenever there is some strategic implication, please ignore short-term decision making. Always consider long-term impact. Consider stakeholders' interest instead of shareholders' interest, risk appetite, and regulatory obligations. If you are asked whether to ahead with a merger, don't just look financial. Assess synergies, tax structure, competition law, or other outcomes. But all should be based on your scenario given. Okay. There is one more query, and this query is, apart from ICAI's material, what else should I study? ICAI's official case studies on the student portal are the most relevant. Don't rely on shortcuts. Okay. Instead, revise key concepts from your modules. Okay. Make your notes, charts, mind maps. It will be enough. There is one more query, and it is, what if the case study is from an industry I am not familiar with? This is very good question. Okay. If the case study is from an industry, I don't know about that industry. Okay. In this case, the case study provides all relevant context. You don't need to be an expert in the industry. Okay. Focus on business logic and apply your core subject knowledge like tax, Ind AS, Indian Accounting Standards, compliances, and all are connected with strategic thinking. Okay. Practice diverse case studies. To get success in this examination, more number of case study you practice, you will get more number of marks. Okay, then do practice, practice, and practice. Students, if you have any question, please ask now. Please go ahead and raise your queries. Okay, as we bring the enriching to a close, I would like to extend our thanks to our speaker CA Sumit Dada for sharing real experience. Okay, sir, your clear practical explanation of when case study helped us truly understand how a company operating in a growing sector of growing sector, agriculture sector, and whether it's about a reporting under India's handling deductions or aligning the compliances framework. Your analysis showed how regulatory rules, financial reporting, tax provisions, and strategic planning come together when companies aim to scale sustainability and responsibility. It is it's this interconnected thinking that lies at the heart of IBS paper. To all students who joined us, thank you for your participation. Your curiosity made today's session even more engaging and impactful. Wishing you all the best for your preparation, and once again sincere thank you to everyone and for making this session a success. Thank you everyone, and thank you sir.
Thank you, sir.
Welcome.
Thank you, all of the best.
Thank you, sir.
Welcome. Yes, you can over.